How are you?
I'm good. I'm looking at the market. It looks like, I wonder if we're going lower. I think we probably could put in another leg lower, or definitely, if we rally, we'll definitely have to test that recent low. But it does not look like a strong market. Let's go to we'll start with IWM, what most stocks are. 1 second here. Zooming in. Okay, so you got the big sell-off, obviously. We rallied back up, but really not on strong volume in the beginning of 25.
Yep.
These are daily bars, this daily chart. You can see the big volume bars are the red ones. We broke through a pretty important level here. Just as a reminder to everybody, when it comes to charting rules on a breakout, it's important that you see strong volume. Volume equals validity, but on the breakdown, volume is less important for the move to be confirmed. And you can see we slid through this support level. And there wasn't a lot of volume, but it did pick up as we moved lower. And then I want to focus everybody's attention now. Look at the RSI. It's way down there. Seems like long-term, probably a good time to buy. If you bought in October of 2018, it was a good time to buy, but you went through some time where you were pretty frightened. So let me just go to, here's 18. Right here, this was a good time. Oh, then there was the COVID crash. It was kind of hard to say, but and not only that, we're looking at IWM right now and small caps. This is when large caps started to do much better. So I'll show you SPY in a sec. But you still were pretty good if you bought around here. And remember, we're buying the sectors that are the strongest. We're focused on allocation, not IWM in general. But we did drop, and then we rallied right back up. Let me just go to a SPY. Again, we're focusing on if you're a long-term investor. SPY, remember, large caps did much better. So SPY is going to do much better than IWM. Where are we here? 2018. Okay, so right over here, these are weekly bars, and it's a 10-year chart. So this is actually a lot of data. This is from October 15th through the end of November, just trading sideways. So this is about 6 weeks. This was still a good time to buy. I think this is where we are right now, similar to what we're looking at right now. So long term, it's a great time to buy S&P 500 large caps. Large caps still are the stronger one. So we got to move lower, and now I'm zooming in. Now we're at a daily chart of the S&P 500. So daily chart of the large cap index, and look at this. We recently were discussing this, but I'll move higher. I think what was it yesterday on the sector focus webinar? Move higher, move higher. Yeah. These candles are not strong candles, right? They don't close at the high, and look at the volume just fade as we move up. So that's not good. And usually with a selling climax, you'll get a gap lower maybe, or intraday the market moves much lower and then it closes around its opening price after moving much lower intraday. We didn't get that kind of selling climax charting pattern. What we got was a rally with lighter volume. So, expect potentially some more downside. If we get a rally, I mean, there's going to have to be some from here, there's going to have to be some big announcement that just jolts us higher. Because sometimes you look and you say, oh, well, the chart pattern says it's more likely to fade out, but you never know what can happen. If something happens where actually stocks have bottomed out, there's going to have to be some big, strong announcement that everybody absolutely loves. No use in trying to predict whether or not, don't try to predict the future. Don't bet your money on your ability to predict the future. Look at probabilities. Probability here is that it wants to go lower. Now, it is kind of low already. It is kind of oversold. It could drift higher to this blue line here. The blue line here is where you get the gap higher on the election, and then that became support, and then we broke through support. It went straight through. Let's do a see. So let's do a little, go into lesson mode for a second here. I was going to do a Fibonacci extension after kind of measuring the range here. So what's the range, right? So let's let me just draw this second line. All right, the range is right here, or do you start up here? Hold on a second. So this is something that people, when they're charting, will ask. The real answer is measure it both ways, and just kind of know that. Also, you could you could kind of argue that maybe the bottom of the range is a little bit higher, but there is such an important gap higher here. The market closed at the high of the day. You've got that gap. We pretty much have a very important support level right here. So this is the range that I'm going to use. I'm not going to use this top for a couple reasons. Number one, there's like 1, 2, 3, 4. There's several times where this was the resistance level. It's proven much more than you say. Yeah, well, it broke above. It's like, yeah. I mean, I would consider that. I'm not going to ignore it completely, but I'm not going to give it much love either. Look, when it broke out, look how it's like the lowest volume that you can see right now. It really was BS. Or maybe it was like a last ditch effort to get prices higher so that they could sell into it, into the algorithms that buy stock because it broke above this level. So anyway, this is the range I'm going to use, and I'm going to do a Fibonacci extension. So pulling that up. So again, it automatically measures this range right here. Doesn't really matter if you go back here, over here, you know where you are, as long as you're on this lower horizontal channel line. And click again. All right. And we're going to zoom out a little bit. So minimum price objective is about, and this is SPY, which is the ETF that tracks the S&P 500, give or take. I'm going to do this just to see how important this level is. You know, the 100% level. We're going to back it out to 3-year weekly. You know, it's an all-time high, right? And yeah, then let's start looking at some of the other levels if we do break below that 100% mark. So remember, we're not just thinking about, you know, if markets trade lower, how much lower will it go before the bulls are saved by that support level? We're not just thinking in those terms. We're thinking also, remember, support and resistance kind of have a gravitational pull. So it's not like, I mean, if we break below this level, it's not like we're saying, okay, we could bottom out anywhere around here, but worst case scenario, it goes down here and bounces. That's one consideration. But the real, or not the right, no, that's one consideration. The other consideration that people overlook is it has a gravitational pull. So if we break below this level, which I would not be at all surprised if we do, considering the light volume on this rally. I mean, we're oversold, which is kind of a reason for it to trade higher. It could go up to this old support level, and just the gravitational pull. Like if nothing happens, you know, nothing really important, maybe it'll kind of get up here again. You never know. But it, based on the volume, it almost certainly has to get back down to this level. And also based on that weak ass volume. I mean, look at. I did another measurement. When I zoomed out, you didn't even see the 161.8. I think. Let me zoom out again. I'm going to three-year weekly, like we just did. Yeah, it is there. I just covered it up. But basically, I didn't even think about Fibonacci for a second. I just said, okay, if we break through this 100% Fibonacci extension minimum price objective, if we break below, then what? And I didn't even look at the Fibonacci's. I just said, okay, well, if I go to this high. And, you know, old resistance becomes new support. This is definitely a key area right here. And just extend that out. And it lines up exactly with that 161 Fibonacci level. So, I mean, it's as close to a guarantee as we probably can get that, you know, this would be where it bounces if it hits the fan.
Yeah,
we look, this is the resistance level, and look, 1, 2, 3, 4, 5 days of resistance. This is that extra line that I drew. I just kind of drew it to the side just based on this one thing. And then look, when it breaks above here, let me just do this. When it breaks above, it gaps above, right? This is back in May of 24, you know, like 10 months ago. So it closed here, and the next day gapped above. It gapped above, right? Algorithms were triggered. It gapped above. And then let me zoom out a little. So this is where we're just looking at gapped up here. And then respected that support level, you know, maybe broke a little bit lower. Next day, intraday, went down and came and closed at the high and then sent the markets higher. Okay, so zooming out a little bit more. Again, this is that lower line that we drew that lines up with the 161% Fibonacci. And then we say, because if you're looking at the weekly, you look at this and you say, well, it looks like it broke below that. When we zoom into the daily, we say, well, it was there for half a second, and then on big volume, reversed back up, shorts covered. And then this line was respected again. You see how it's gapped up again. Support here, very briefly, shorts covering, rallies. So we found the levels that are super important. I'm not going to delete these from my SPY chart until we're out of this, I think, probably. So what do you do? Oh, do we take bearish positions? I don't know. I mean, I think have some bearish positions, but you want to be careful.
Yeah.
You know how quickly markets sell off? Look at this, how quickly they sell off and then they recover very quickly. You know, the RSI is already down here for daily. And let's go to weekly again, 3-year weekly. RSI is down here too. So, you know, unless we're going into a new bear market and you don't want to try to predict that, you know, and we are seeing weakness in U.S. equities. It's still the strongest asset class, but it's pretty significant message of weakness in U.S. stocks. So we'll have to see how this plays out. But just be prepared, I guess, mentally, because what's the biggest killer of you know, traders? It's emotions, right? So just be mentally prepared for this. Know where your levels are. 161, you'll get a bounce. If we break below this 100, you know, the percent Fibonacci probably gravitates to 161, but then bounces and then probably gravitates right back up to this next, you know, this back up to this 100 level. I'm talking in terms of SPY instead of the S&P index, which is kind of, you know, you hear people on CNBC talking about the S&P 500. I pull up SPY because it shows the volume.
Yeah,
the S&P 500 index is an index. It's a math equation.
Yeah, Chris, it's really interesting. It's you mentioned trading emotionally. There's probably never been, I think, and you know, I'll just say that this time we're living in now, if there was ever a period that was fraught with the temptation to trade emotionally, you know, it's right now. And it's part of the reason is people are they're just so dug in, you know, let's just take politics. They're so just dug in that they're on the right side, or that you know, no matter what's happening. And it's, you know, put aside the emotion of, okay, you know, I'm long this position, I'm attached to this particular stock, I don't want to sell even though it's going up. That's one level of emotion. But then there's just, you know, I'll be damned if I let the other side win. I'd rather go broke than admit, you know, that this or that is or isn't happening and stuff. It's a really interesting time, and it's and the temptation to trade the stories and the, you know, the tariff move or the Ukraine thing. You mentioned a big announcement that could happen, and I was thinking, what would that be? I'm not anticipating anything.
It's fun to speculate.
Yeah. No. I was going to say I'm not anticipating anything from like the Fed. I'm not looking in that quarter. But if something like if Putin, you know, Trump calls Putin again, and it's like, okay, we've got a ceasefire, this thing is going to end. That's something that may be big enough to do it. But even that, if people are going to trade the stories, you know, they're getting sucked into, if the story doesn't pan out, all right, I was wrong about that story, and they'll panic and get out. I would say anybody who's like really bewildered by this market, don't feel like you have to be trading. You know, if you feel like these stories are like whipsawing you around and you feel yourself being emotional, take a breather. It's my 2 cents.
I agree, Bill. I mean,
you look like you're hunting around on the chart for something, and I'm trying to figure out what it is.
No, I'm just doing that I'm hunting around in my mind and how to answer, you know, how to respond. I'm thinking a lot of things running through my head right now. You know, it's important to remember that everybody's a different, you know, a different animal, a different type of trader. So it's sometimes hard to address a group of people because everybody kind of thinks about it a little bit differently as it relates to them. The the thing is that a lot of people, they got into these, the quantum computings or the red cat, things that were very volatile, very excited, and you got the Trump wave. I was excited. You saw a lot of volume come into things. What's I think is probably the best course of action, if I could just give one message to everybody, is think about allocation. What sectors are strong? What sectors are strong? The financials, the commodity sectors are strong. The metals sectors are strong, whether it be precious metals, gold's killing it. International stocks are actually doing pretty well. You want to see a very different chart? EPOL, Poland. Europe emerging is doing pretty well. What's cool is international for a while has been, especially emerging Europe and Europe in general, developed Europe, but emerging Europe especially, has been leading U.S. stocks for a long time. To kind of come full circle on what I was saying, and as it relates to the U.S. stock market, we saw off of the 2022 low, this group, these three characters, these three players, international stocks on a relative strength basis, they became strong. They moved to the top first. And then U.S. stocks kind of took over and became stronger. But international stocks broke new highs first, especially, I shouldn't just say international group mall, but definitely Europe emerging, broke out to new highs first. And then the U.S. market was like 6 months behind it or something like that. Now, that doesn't mean it's going to exactly be 6 months, but just it's a good thing to see if you're bullish on U.S. stocks. Like on one hand, like international is a lot more volatile, the upside and downside, but long-term U.S. is still first place. Hasn't been dethroned yet. But it's, when you're like, holy crap, like is the U.S. stock market going into a bear market? Like what the hell's going on here? It's nice to then look at, the players that led us last time out of the bear market doing well and doing really, really well. Even since 2022, if you look here, 2022, okay, continued past in the United States, this was, let's see, right around here was our low, right? So the bear market low of 2022 for the U.S. was here. We're looking at Poland right now. Then it came down even lower, which we didn't do, but our second low was right here. It's just an even low for us, but it was October. But the liftoff from October was huge, and then stocks rallied, moved up to their highs, broke out. This is GREK is another one. This is Greece. So 2022 again. Here's the June low for the U.S., but we're looking at Greece right now. Greece didn't get hammered as badly as Poland, but it was basically made a double bottom like we did. But look at the breakouts and new highs going into 23. Right around here, we were worried about the banking crisis, Silicon Bank, all that. And we just continue breaking highs in Greece. And now we're breaking highs again when the U.S. market's getting smashed around. Poland, which we just looked at, EPOL. Greece, which we just, look at the highs. Let me actually put just know that this dates back 5 years. It's a 5-year chart, okay? So look at what's happening here. This is just this year, basically, is right here. That's Poland. And as we said, it's pretty high. It broke out. Might want to wait for a pullback, retest the old resistance or something. But look at that big volume coming into international stocks. Market players love Europe right now, love Europe developed. So if you figure out the timing, that's another subject. I don't want to just tell everybody you figure it out, but it's another subject. Right now we're talking about allocation. So Poland, Greece, we were just at GREK, but I'll do it again. Again, look at it going up with high momentum, but look at the RSI. It's really high up here. You could probably wait for a little bit of a pullback to buy in. Look at the gap higher. Let me just zoom in. See how it gapped higher? Probably wants to pull back a little bit to about 44 to 48 right now, maybe even 43 on a pullback. And then the other one, which hasn't really broken out, Turkey. So Turkey hasn't broken highs, has the potential to, You know, it's not super overbought. Look at the RSI in terms of the amount of momentum that recently came into it. You might want to pull back a little, but I mean, you see it ran into some resistance right where you would think that it would run into resistance. Let's draw a line here. Hold on. All right, definitely a key level right here. So two things that can be true at the same time. Number one, you know, if you're buying here, you're buying where it usually pulls back. That's a reason not to buy it right here because it usually pulls back. I probably would rather buy it after it broke out at a higher price than buy it right here. Not everybody, you know, feels comfortable with that, but this, you know, that's welcome to trading. You know, you're doing things that are uncomfortable most of the time. Where it bottomed out, maybe it can go a little bit lower, but definitely some support there. Resistance, support, a gap. You know, these are definitely two very clear price points. So when you know what the price points are important, then you go from there. Let's do a Fibonacci extension and see if it leads to these exact resistance levels right here. And what I'm drawing, you know, I'm eyeballing it. It's give or take. You know, charting is an art, not a science. Look at the 100% right at that resistance level. Boom, boom. So on a breakout, and remember, emerging Europe is doing really well. On a breakout, probably goes up to about 43, you know, let's just call it 43.50 just to be safe. I don't know, maybe a little higher. This says 43.84. The question is, do you want to buy it on a pullback? And then, you know, you'll probably get some gravitational pullback up to here. So you know, the beauty of buying on a pullback is that, okay, maybe it'll go lower and there's some support right there. But the relative strength of international stocks in general and the relative strength of Europe, especially emerging in general, says it's more likely that after a pullback, it'll probably reach kind of like the mid-range right here, or maybe not even, and then move up instead of move down. So if you have this sideways channel, this horizontal channel, that could be kind of the ceiling and the floor, but also gravitational pull up, gravitational pull down. Odds, I think, favor gravitational pull up. So either, you know, if it breaks out from here, look for 43.50. Personally, I like to, you know, buy on a pullback because then it's probably going to have gravitational pull right back up here. So that's, you know, at least you have that, right? But if you buy here at resistance, maybe it's going to pull back. So I'd wait. That's me. And then, you know, you're riding it up to 43.84. It's a lot easier to deal with. Maybe you find some resistance there and breaks out. Maybe it, you know, it's too far to think ahead pretty much as a trader. If you're a long-term investor, you're not really fighting for pennies here. Long-term investor might just want to buy Turkey, buy, you know, long-term investor, I don't know, Poland, EPOL, and Greece. When
you think buy and hold, think Poland and Greece.
Yeah, Poland, Greece, and Turkey, you know, but, you know, I mean, buy and hold, you're saying that because they already kind of broke out EPOL. But look at all the volume. There's a lot of conviction. They broke out of a very important base. They broke out of this high, you know, broke out of the high and then pulled back and then really broke out. Like, you see that volume? Like, there's a lot of conviction. It looks like these are going into a, you know, long-term bull market now.